Hey, my guest this segment is Steve Palmer, President and CIO of AlphaNorth Asset Management. Steve, welcome back.
Thanks for having me.
Steve, we're in the midst of tax loss selling season here, and that combined with some of the other aspects macroeconomically, geopolitically, seem to be really creating a downdraft in the market. What's the position from AlphaNorth Asset Management?
Well, we focused on small caps, so our benchmark is the TSX Venture Index, which is down 33% year to date. I think it's my opinion that this is the last week for tax loss. I keep track of a lot of statistics on the venture market, and as far back as I have data to 1990, if you look at that from December 15th to the end of the year, on all 28 occasions, the market has been positive over that period. So I see no reason why it would be different this year. So I'm assuming that the negativity will be done by Friday.
So Steve, to what extent would you say that the end of year reversal is a result of the end of tax loss selling versus other sort of more macro cyclical influences?
Well, a big part of it's the end of tax loss selling, I think. There's also, although you're not supposed to do it, there's games that go on at the end of the year with high closing, and maybe it's just a function of there's no more sellers left, so it's easy for stocks to rebound into year end.
I see. And so what sectors are you exposed to that have performed well versus others that have not performed as well as you might have wanted?
Well, it's, the selling this year has been across the board, really. Like the hot sectors of crypto and cannabis have all corrected significantly. For us, probably the best sector this year is the healthcare space.
X of the cannabis?
Yes, I don't consider cannabis healthcare.
No? No. Okay. So then, do you think that the cannabis sector's weakness after so many years of positivity is a result of sort of fatigue of the wave, so to speak, as opposed to weakness in the fundamentals, which have arguably always been there?
Fundamentals are questionable in the cannabis space. It's, in our view, it's been a bubble. And when you have a bubble, the things are going to correct significantly. If you look back at I compare it to the technology bubble in the late 90s. And with that, even the companies that survived and are big winners today, like Amazon declined 95% during the bust in 2000, 2001. So I believe the same thing is going to happen with cannabis. Most of them will be down 80 to 90% from the peak at some point, but there will be survivors and they will rebound.
Sure. Okay, so do you think that the as yet unannounced deprohibition in the United States could be an offset to that? I mean, I look at the fact that cannabis really hasn't become legal in the majority of countries at this point broadly, and so for me, it's like there's all this pent-up positivity in the cannabis sector that will yet take it higher. So do you think that 90% correction you're referring to is something that's more of a short-term thing in between those macro catalysts, or that's just broadly where you think that the valuation is going to be in time?
I'm not saying that there won't be some upside from where we are today before that happens, but in fact, I believe there will be. I think they've corrected enough at this point that there will be another move higher before there's another move lower.
Okay. What exposure does your fund have to cannabis?
We've avoided the growers largely. It's a commodity type business. We've tried to focus on some niche places. Because companies that either have something proprietary. That's a big focus for us.
Okay, so more on the technology and delivery side, consumer packaged goods side.
Yeah.
Oh, okay. So now I also know that because we're Canadians, that you've got some exposure to the resource sector. And how has that performed for you this year?
Resource stocks have not done well either.
Right.
Gold looks like it's trying to move higher. It seems like it's bottomed, so I'm positive on that space. I think that will also take a lot of the base metals with it. So I think the market right now is setting itself up for a significant move higher all sectors have come off, but we could get a coordinated move to the upside.
Sure. So is there any sector that you view as more opportunistic relative to the others going into 2019?
Not really. There's not one big sector that I'm particularly focused on. I think they're all going to do well.
Mm-hmm. Yeah. Okay. So how about new sort of sectors like the artificial intelligence and some of the AI plays out there? Do you think there's a real potential for a new bubble in these stocks?
Down the road, there could be a bubble, but there isn't right now.
Mm-hmm.
There's a lot of opportunities in that space.
Yeah.
Yeah,
do you think that the sort of contraction in the valuations of crypto and cannabis, two of what have been the hottest sectors in 2018, do you think that might set the stage a bit for a recovery in the commodity metals?
It could. Like if investors get scared out of these other sectors or want to take profits in cannabis or whatever, they'll have cash to redeploy in other sectors.
Right. So do you think that though one of the great discrepancies that I've been observing in the mining space, and I'm sure you must have too, is the fact that we're seeing the reported stocks and inventories of key metals that are used in large quantity industrially, zinc, copper, etc., showing decreasing, viability. Yet the price does not reflect that decreasing availability of these metals going into the future, and so it looks like at some point the supply and demand metrics are kind of out of whack. It would almost demand that the prices for metals go higher because we are heading towards deficit in especially copper and less so zinc.
Mm-hmm. The fundamentals are positive. In the last few weeks, we've had a number of companies that have announced letters of intent or new purchase orders for their product, and the stock price has done nothing. Investors just don't care right now.
Because of the fear that's permeating the market as a result of the heavy tax loss selling?
I think so. It's just,
Yeah. So a lot of guys, they say that, the bloom has come off the rose in the cannabis sector. Mm-hmm. And, to me it seems that the negativity in the marketplace is largely exacerbated by this confluence of, you've got tax loss selling, you've got, macroeconomic risk as represented by the updraft in the interest rates by the Fed, you've got geopolitical slash macroeconomic risk in the trade war that Trump has sort of opened on multiple fronts with multiple countries. To what extent do you think that the normal tax loss selling at this time of year has been compounded and exacerbated by those effects, those additional effects at the same time?
Yeah, well, there's been so many IPOs in the cannabis space. Like, I track over 100 names, and 2 years ago there was just a handful. Mm-hmm. So the market's been flooded with cannabis companies. I think a lot of the retail investors are looking for a quick buck. Many of them have done quite well right out of the gate, like they doubled in short order, and that's the game people have been playing, trying to flip these for a double and move on to the next one.
Mm-hmm. So do you think that there's been several large billion-dollar plus IPOs that have typically been characterized by a few commonalities? One, they've all got these super voting structures where essentially a couple of insiders control all of the votes in these companies. Mm-hmm. Secondly, they've done these IPOs at ridiculously accelerated valuations in a small time frame. Mm-hmm. And I'm going to, I'm not going to refer to any names specifically, but where, they did their first raise a year ago at, sub $1, and now they're doing IPOs at $20+ Mm-hmm. And the last 5 I've noticed with super voting structures, they're also typically US multi-state operators that trade on the CSE. All these characteristics, the last 5 of those that have come out have all sold off from their IPO price and now sit at somewhere around 30% or more below mm-hmm. the IPO price. Do you think that series of large cap cannabis IPOs has had a severe chilling effect on the market?
It has, and investors need to be aware of the cheap stock that's in some of these companies. Like when somebody owns shares that cost them 5 cents and then it goes public at $1. I'm just making up numbers here, but like there's a high risk that those guys are going to want to lock in some gains, and it's going to put pressure on the stock.
Yeah, right. So then how do you approach the cannabis space going forward? If we're in that point in a bubble market, in a mania, where the easy money's been made, now we've got a surplus of opportunities that are characterized by decreasing quality of opportunities. So how do you address that going into 2019?
Well, as I said before, if they have something proprietary, that is something we like. I think some of the international opportunities are probably more attractive than the domestic opportunities at this stage. I always look to make sure that there's no cheap financings done. Like we're not going to ever take a position in a company at a significant multiple to where insiders or others have got positioned. Those are some of the things we look for.
Sure. The CSA, or the Canadian Securities Administrators, has issued a bulletin cautioning investors about some of the promotional activities of the issuers recently, and among the concerns of the Canadian Securities Administrators is that there are issuers creating, a sense of expectation that would be considered, let's just say, a little overly optimistic. And so is that something that you're seeing from where you sit as becoming more prevalent in the market relative to, call it, 2 years ago?
There's a lot of promotion that's going on in some of these companies. Some of them spend hundreds of thousands a month on promotion. Usually when the promotion stops, that's when the share price rolls over.
Right, I see. Okay, so what really excites you about the market in 2019? Is there anything that excites you? Or are you just more or less very bearish?
I'm generally very positive given where the market has settled here. All the sectors have pulled back. We have several biotech names in the portfolios that have a significant catalyst coming up next year, like phase 2 and 3 data that we believe have very good odds of success. And then there's some technology names that we have too that are, I think, are going to get a lot of traction, continued traction next year. Okay,
so why don't you tell me a little bit about the AlphaNorth Asset Management Fund? Who are your investors? Who is it an appropriate investment for, in your view?
Well, our main fund, the AlphaNorth Partners Fund, is a long bias small cap hedge fund. It's for accredited investors. So we take a diversified approach. We invest in all sectors. We're looking for situations that have a lot of leverage to the upside, so where we can do many multiples of our investment amount. We do a lot of private placements in that fund, so we pick up warrants usually that give us the leverage to the upside.
Sure. All right, Steve, well, that's great. Appreciate your input as usual. We're going to leave it there for now, and I'll come back to you in due course. We'll have another conversation. Thanks for joining me.
Thanks for having me.